everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are a bunch of things to pay attention to for the upcoming trading week. Now I'm going to start things off usually where we do about this time of year, which is earnings. Last week we had some monster earnings. We saw Google report, we saw Microsoft report, we saw Amazon, and those created huge waves for our markets. But we're not quite done yet, so let's start with the earnings calendar to kick this week off for May 1st. 1,594 companies reporting this week, and we start things off on Monday with Stryker, Vertex, Arista Networks, and Diamondback Energy. Tuesday brings you Pfizer, AMD, Starbucks, BP, Uber, and Marathon Petroleum. Wednesday, you've got Qualcomm, CVS, Estee Lauder, Kraft, Heinz, Phillips 66, and MetLife. And on Thursday, the big daddy, Apple Computers reporting earnings. You also have Square or Block, Shopify, Shell, ConocoPhillips, and Anheuser-Busch. Let's see how the fallout goes from their latest ad campaign, which are getting a lot of backlash on. And on Friday, you've got Berkshire Hathaway reporting earnings. So that's your major stuff coming out with regards to earnings for this week. Of course, all eyes will be on Apple on Thursday. It is one of the heavier components of the Dow and other indexes as well. Now, this week is critical because there's been so much talk about Jerome Powell and the central banks around the world and what are they going to do with regards to rates. We've had this huge surge up. We've followed that closely here on Monday Morning Must Knows and in your curriculum at Online Trading Academy. But what's going to happen this week? Well, I'm not going to start with the U.S. because we'll go in chronological order for this week. So let's take a look at central banks, starting with the Reserve Bank of Australia. That's right. We're going to go to the Southern Hemisphere for the Reserve Bank of Australia, which is coming out with their rate announcement. That's going to be Tuesday at 12:30 a.m. Eastern Time, so just after the stroke of midnight. And this one's important because they have stopped raising rates. At least that's the expectation. It looks right now like the expectations are going to be 3.6% for the Reserve Bank of Australia. And of course, as they start to slow down, that may be a sign that other banks are going to slow down. But really, that's not as critical as this next one, which is going to be the FOMC statement. That's right. Our rate statement for our central bank here in the U.S. is coming out Wednesday at 2 p.m. Eastern Standard Time. That's expected to jump from 5% to 5.25%. Now, this is already kind of baked into the markets. There's, some people expecting it to stay at 5, some people expecting to go to 5.25, but the majority saying 5.25% or a 25 basis point increase. What's more important will be the press conference shortly after that. That's going to happen at 2:30 Eastern Time, and there we'll get a much better sense as to what Jerome Powell, the central bankers, are thinking about rate policy going forward. You remember at the last meeting, he forecasted by the end of the year 5.1% for a Fed funds rate. Well, now all of a sudden we're going to jump to 5.25. Does that mean that by the end of the year we might backpedal a little bit? A lot of variables to figure that one out, which can be inflation and growth and unemployment, and we, of course, have a long way to go until we get there. But that press conference will be critical in helping us understand exactly what they're thinking, or at least give us a clear idea of what they're thinking. No one knows exactly what the Fed is thinking. All right, and finally, we had a banking crisis here several months ago, and it really created a lot of shock. A lot of the financial sector just got absolutely slaughtered, created some great buying opportunities, I might add. However, the question remains, are we done? There were some recent events that happened this week, which really caused a lot of people to believe that there's much more pain ahead for the banking sector. And what, pray tell, would that be? Well, keep your eye on a company called First Republic, the FRC meltdown. Now, unfortunately, I got caught up in this one. I am currently holding some FRC shares, which is not very good for me, but we'll see how it ultimately pans out at the end. Here's what happened. First Republic, obviously a very large bank, got caught up in that meltdown because of withdrawals. Deposits were there, but they were getting yanked out by customers who were fearful. So that huge run on their bank took out a ton of the assets, which they used to generate income. Now, you notice the sharp decline here. This thing was up over $220 per share, presently trading right around $4 per share. I'll zoom in a little bit clearer here so you can see kind of what happened over time. This chart now shows us from about $150 down to current price, but really this is what happened last week. We opened up Monday, things looked okay, and then it just absolutely fell apart on their earnings on Tuesday, and now the concern is it's going to go into receivership. Now, what is receivership? Well, receivership is where the FDIC and regulators take over the bank, essentially putting it into a state of bankruptcy. Now, this is going to create a whole new wave of fears potentially for the banking sector. So if you're long on XLF, the financial ETF, or any of those financial stocks, there may be another shock to the system coming. most people felt, including myself, that we were out of the woods with this because you had Janet Yellen, the Secretary of the Treasury, you had Jerome Powell, the Chairman of the Federal Reserve, you also had the FDIC and our president and government say, we'll bail out any bank. Everything's fine. We're going to backstop this whole system. And all of a sudden, it looks like another one could go under here shortly, which might create a lack of confidence in regulators to contain or control the situation with our financial markets and banking specifically. So keep your eyes on First Republic this week. It may have some issues, and if it goes to receivership, that could send some shocks through the financial markets, creating even further downside moves. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.